The United States of America is now the world's top beef exporter. Australia did hold the title. Brazil then took it over, but the fading US dollar has allowed American beef back on top. In volume terms, exports out of America in June totaled more than 111,000 tonnes. In value, that was in excess of $460 million US dollars. Australian figures for that same period are enlightening. In volume, the total was just over 86,000 tonnes. Now, those figures confirm the biggest drag on the Australian industry at present is the power of the Aussie dollar. This, of course, makes it really tough for processors and exporters to compete against the United States. Now, the equities crash might push the dollar south, but first let's see what's been happening in the sale yards, where numbers were much the same as last week despite the rain, and quality remains good to excellent. In seasonal terms, there's an obvious trend to retain females. The only real surprise here is the cow market. It's very solid despite the trucks from the north with those overweight Brahmins and owners looking for any price. You have to suspect the full impact of that scenario is yet to come. Beef Central newsletter has covered the second quarter results of JBS, the world's largest beef processor. Here's how Beef Central reported Wesley Batista's analysis of its Australian operations. Besides suffering from currency appreciation, operations in Australia faced other challenges like the increase in collections by the government, the carbon tax project, and the increase in labour costs without any corresponding increase in productivity. That's Wesley Batista. And the erratic ride of the Eastern Young Cattle Indicator continued. It closed Thursday at $3.85. That's its best since early June. And there's been a bit of activity in the live trade. Cattle on the boats which arrived in Indonesia last week will be lot fed for 120 days before processing. Prices ex-Darwin are still way down from the pre-suspension days, and there's also some activity with heavier cattle heading to the Philippines and Vietnam, but again at prices well below average. And the lamb market has picked up. This might be to do with reduced yardings, but buyers might also be waiting for the first flush of new season lambs that's due in a couple of weeks. Sheep yardings are way up on a month-to-month basis, but still down on last year. Mutton continues to slide to a more realistic price level. Turning to grains now, and it perhaps shouldn't happen, but it does, and that is food and fibre markets often turn sour when the wider equity market crashes. Now in Chicago, after several sessions on the up, most of the gains were given up late in the week, and if the mood is any indicator, there could be more pain to come. Soybeans held up relatively well in the back of some production issues in America. Wheat will be tested in coming days, while corn slumped a fraction, but the forecast for corn is in fact very, very bullish. Back home, ASX futures finished the week lower. There were two factors here, the equity market mayhem and good rain across much of the East Coast grains belt. To New York now for the softs, and cotton slipped late in the week after going up in response to flooding in Pakistan cotton country, and sugar remains firm as market chatter has China the very poor cane crop. So cotton had an overall lift of close to 10 cents, and that sugar price is up just over a cent for the week and up about 9 cents on the price in late May. Finally to wool, where traders are again struggling with the yo-yo exchange rate. It's varied close to 10 cents in just over 2 weeks, but the feeling in this market is that the next few weeks could set a trend for the Aussie dollar. Buyers were very, very cautious, and the Eastern Market Indicator closed down 4.3%. And as usual, buyers from China were again dominant. And that's the Landline check on prices.